All right, everybody, welcome back to another edition of Market Talks with Dr. Stoxx. We are on a wacky Wednesday session. It is the 4th of December, 2024. We are in the middle of a week where we're getting a lot of data about jobs. We had the JOLTS data out yesterday, which was a miss to the downside. We had ADP payrolls come out today. I'm sorry, I don't think the JOLTS was a miss to the downside. I might be mistaken about that. But if you look at the trends over the last few quarters, you're going to see that everything is still in falling mode. The ADP number, however, out today was not good. It was a big miss to the downside. And then we had the ISM numbers out as well at 10 o'clock this morning, and they weren't so good. You had productivity down and you had prices up. The worst possible combination. However, the market seems to be okay with all that because the market is up here at all-time highs for the S&P 500 and the Nasdaq 100. The Russell 2000 not so hot today because the well, actually I don't know why the Russell 2000 is not. It is up today. No, it's not. It's down. It's been up, down, up, down, up, down all day long. Russell is under a little bit of pressure because apparently the interest rates are not falling as fast as the market would like them to, despite the data. And I suspect, too, the market is pricing in a pretty hot jobs number, which we're going to get on Friday. We had a horrible number last month on some seasonal problems with hurricanes and such. And I suspect there's going to be a really big bounce back. The market is expecting about 200,000 jobs. I bet we get something like 240, 250 because of that backlog of jobs last month coming into this month. I could be totally wrong. And I don't have the kind of expertise or the tools that will enable me to make a really smart decision on that. But we'll just have to see where it goes and we will respond accordingly. All right. So you're coming. I mean, you are with us now in the live trading room. You're coming. I'm coming to you from the Dr. Stoxx live trading room. And if you're interested in joining us and joining a great community of traders of all levels, beginner to expert, professional level even, you can click on this live trading room button here on the drstoxx.com website, drstoxx.com, and you'll be joining us in the live room. If you're interested in my daily or weekly market advisories, you can click on subscribe. If you're looking for a trading system, you can click on manuals. And if you want to learn how to trade, you can click on webinars. All right, let's get over to some charts. Not that. There we go. All right, just real quick look at the indexes because there's not really a whole lot of change from yesterday. So it's just more upside today. We've got, 11 or 12 green days, upside days for the S&P 500 out of the last 13 or 14 sessions. That's very unusual. It does happen. Typically, it means the market's very happy, right? Low volatility, lots of stocks moving higher. That's not necessarily the case here, however, because we're not seeing a lot of breadth across the spectrum of sectors and individual companies. We're seeing most of the growth, most of the price movement to the upside in a condensed set of stocks. The blue chip tech stocks, the mag stocks, the FANG stocks, however you want to call them, they're the ones driving both the S&P and the NASDAQ higher. That's not really sustainable, and that's one of the reasons why I do think we're going to get a little bit of a pullback. You can see we've had, where's my arrow? We have had pullbacks all along the way, shallow and not so shallow. During this uptrend is very normal, totally compatible with a bull market. And in fact, it does help to keep the bull market going because then you get fresh money coming in, right? People get out, they panic. Oh no, the market's coming to an end. It will never go any higher. Better get out, move over to bonds. And then when they see it starting to go back up again, they jump back in. And then you get that nice price movement, something like that right there, or this right here, or that right there. That's what we're looking for. But when you get these long sustained 13, 14, 15 days in a row of pretty much every day being higher, it starts to slow down. The momentum starts to slow down. The volume starts to taper off. And then you kind of find yourself in this this doldrum area, and it becomes very difficult finding the pockets of real strength. So we want to pull back. We would like to have a pullback. No one likes them when they come, but everyone likes them after they're done. All right, so that's where we're at with the S&P 500. New all-time highs, probably going to get a pullback soon. We'll wait and see. We're not there yet. Same thing for NASDAQ. Now, this did take a little longer to get going than the S&P 500. We had a little bit of a, 4 or 5 days here in a row where it was churny, up and down, up and down. And it was preceded by a lot of intraday movement without really the price going too much higher. Now we're starting to play catch up. We're at all-time highs. But again, 100 stocks in the NASDAQ, only 8 or 9 of them are driving this price movement. Many of the rest are either kind of flat or slightly down or just slightly up. There's not a whole lot of excitement underneath the top mag stocks at the very height of that index. Here's the Russell 2000. It is, I would call it a flat day. It's a doji kind of day. Lots of range, right? Up and down, up and down. We got higher earlier. We had a flash crash not too long ago, and now we're back up to pretty much where we started the day. This could be a little bit of a flag forming here, but more likely this is a extended double top. Starting to get a little bit of a rollover. We're starting to see the lower lows, lower highs, and that's typically the topping action that you'll see. And then we can expect, if that does play out, we'll come back into the midline of the LRC. That would probably be the first target. The rising 50-period moving average, as it was down here not too long ago, is probably the secondary target. And once we get down there, then we should be pretty good, pretty clear for going higher into the end of the year. Of course, none of that has to happen. I'm just telling you what the technicals are suggesting here, but everything in the market trades according to the macro environment of the economy and its forward-looking projections and predictions going out. And technicals only give us a glimpse of what's happening right now and what has happened, not necessarily a predictive value. So all of that is with a grain of salt, but the path of least resistance, technically speaking, is to the downside. Not huge, not huge. We still have some good upward momentum. But as you can see from the volume balance down here in the last week or so of trading, we're starting to get some distribution. We're still long gold. We're kind of waiting for it to get out of this little box right here. And so far, so good. I mean, we are at least showing a little bit of profit now after a couple of days of holding through a minor drawdown. But we're above the 21. We're below the 50. We're in this kind of no man's land going back and forth, back and forth. Gold, of course, is a trade on interest rates, inflation, the Fed, asset shifting in and out, the dollar. And so it's getting some mixed signals from all those things. And that's why the price of gold is pretty stationary right now. But you can see from volume balance down below that it is starting to be slowly accumulated. We had some accumulation a couple of weeks ago on a nice rally, looking for a new leg of that to develop here. And maybe we can get up here to about 2,800 to test the all-time highs. All right, we were in Bitcoin earlier today, and we got shaken out on, I'm not exactly sure what, but there was some softness in Bitcoin earlier on in the day. Hit our stop, went a little bit further below that, then rallied back up. And then we got the news today that President Trump was nominating someone for the SEC that is very pro crypto. And it rallied right back up to near the highs of the day. All that is to say, however, that Bitcoin is producing right now a very nice looking bull flag. We're up here. We're not near. Are we at all-time highs? I guess we are. Yeah, 100,000 is on an intraday basis what it tagged a couple of times, pulled back down again. But up here in the upper 90s is all-time high territory, and we're just coiling up. This is very bullish, right? This whole, where's my rectangle? This whole period right in here, it's up, down, up, down, up, down, but it's banging up against the supporting or resistance trend line. And as I like to say often, the more times you bang on the door, the more likely it is to open. And I suspect Bitcoin will be up above 100,000 in a week or two. We probably will want to get back on board, but we are already on board with our coin position, COIN, which is the exchange where Bitcoin is traded along with other cryptocurrencies. All right. Let me get over to FinViz. I forgot. I was going to show you FinViz. So look at this. Here's this little flash crash. Took place over about 20 minutes. Started at around 1 o'clock. Powell, I think Chairman Powell was giving a little speech. Market didn't exactly like what he was saying, and then it's starting to rally back quite nicely, in fact. S&P highs of the day, NASDAQ highs of the day, Dow Jones almost there. Russell 2000 has some work. As I said, it's the weakest of the group on rate worries, but at least it's off the lows and starting to bounce back. This is, I want to show you two things here. First of all, the heat map for today, you can see it doesn't look that great, right? This is not a broad market rally. Despite the fact that we're up at all-time highs, we're seeing a lot of sectors red to even sharp red. Like look at the energy down here, very bad. Beverages, very bad. Financials, not so good today. So anything that's kind of rate sensitive, real estate are down, home builders are down, utilities are down. They're all dependent on lower interest rates, and doesn't seem like we're going to get that. So we are going to get, or at least we're likely to get, a 25 basis point cut in a week or two from the Fed. But after that, they'll probably go on to a pause for a few months. The market's just a little too strong, and they really don't want inflation to come back. Where is the strength today? Well, it's up here in the northwest quadrant, right? Technology, consumer cyclicals, which is Amazon and Tesla mostly, communications, which is Google mostly, healthcare, which is Lilly mostly. Semiconductors are actually finally starting to show some good, consistent strength, but man, they've got a long way to go. NVIDIA is the only one that's good. And outside of the American exchanges, you've got Taiwan Semiconductor, TSM, also doing really well. Those are the only two semiconductor companies, other than maybe some small ones, that are up near 52-week highs. Everything else is down near the lows or somewhere in the middle. So it hasn't been very good, but we're looking for the whole sector to come back online, and we need China to cooperate a little bit, and we also need we need some good regulation cutting for the industry. So, I used to live in Washington, D.C. A number of years I lived in Washington, D.C. Between undergraduate and graduate school, I worked on the Hill for a while, about 3 years. And there was only one place in D.C. that was safe to live, and that was the Northwest Quadrant, right? So even if it was super expensive, if you could find a little studio apartment in the Northwest Quadrant, you were doing well. And everything else was just a little too scary. So that's kind of the market we have today. Everything else doesn't look very good, but the Northwest Quadrant looks really nice, really nice. All right. So let's get back to home page, and let's just type in something like, I want to type in this one, IoT Samsara, which is a software play, and they're just about to report earnings. I think it's tomorrow night. And I was talking to the room a little bit ago before I started airing this about how we can play with just some little bit of money, fun money, right? Or we can do some lotto calls if we want, or some lotto puts if we think it's going to go down. But playing earnings, which I don't normally do, I don't like these binary events where it can go up 10%, down 10% overnight because of some news that's coming out. But if you have an edge, and I think we may have an edge, then it's a pretty good chance that you can get on board something with a 60%, 65% lean toward one side or the other. And if you do, you just take small money and do a bunch of these, diversify your holdings, and hold on to them for just a day or two. Excuse me. Because here's what happens typically on earnings: you get a big gap up or a big gap down, and then it just goes flat for days on end. You don't want to hold it for days on end if it's not going anywhere. The big move is happening on the earnings itself. So if we can do these overnight binary events with some small money, if we've got an edge, then uh, we can try it anyway. So here's where we can get an edge. Maybe it's a big maybe. So finviz.com, your one-stop shop for all things stocks, is a free service. You can subscribe and get real time and other features, but really you can use almost everything here for free. And what was I going to? Oh yeah, so I wanted to show you the service. So here's IoT. If you click on financials, you'll be taken to a site. IoT doesn't pay a dividend, so there's no dividends here. But if you go to earnings, I think this is the tab, you can see um, a nice steady growth, upward growth on quarter to quarter basis of earnings that have been, and they give you the estimate and then the actual report. As long as you see these blue bars taller than the gray bars, of course, these are negative earnings here, but the blue bar is well above the gray bar. As long as you're seeing that sort of upside beat on a regular basis from the same company, you've got a pretty good chance, I think, of seeing a same beat in the next quarter. And if you look at this chart, every single quarter going back to the third quarter of 2022 has been a beat, a big upside, right? Down here, you've got the percentages of upside surprise. 426%, 222%, 443%. Now, these are big numbers because they don't have much in the way of earnings, right? It's 3 or 4 cents a quarter, not a whole lot. So it doesn't take much to get a 400% upside surprise. But that's one tip, right? So IoT, we would lean bullish on IoT based on what it has done in the past 8 quarters. This is the gap performance, which is, I'm not going to tell you how gap is calculated, but it's a little bit more of a precise number, taking into account taxes and things like that. And you can see this doesn't always show a beat. So there's a little bit of concern there. We could have a bad quarter like this one right here, but every other quarter, well, I guess there's a very small miss right here. Every other quarter has been at least a minor beat. Revenues, so sales, right, coming in, beat, and nice trajectory of growth going forward from the past 8 quarters till now. That looks good. And then this is the big thing: price reaction to earnings reports. How has the stock behaved in past quarters, whether it surprises or not? What is the movement? You can see all these green. This is open, high, low, and close on the day after the earnings were reported. A lot of green, which means the price has been moving up. There's one bad quarter that was looks like the second quarter one of this year was not so good. What happened there? Is it that one? No, it's this one right here. Yeah. So I'm not sure why that missed. Why did the stock react so poorly? I don't know. So we have to keep in mind that even with some good numbers, you can get a negative price reaction. However, it looks pretty good, right? So on a closing basis, you've got 13% to the upside, 14%, 25%. These are big, big overnight moves. 13%, 27%. Now, there's a negative 12 and there's a negative 13. So that could also happen. So you got to kind of calculate, am I willing to risk buying some shares, a 13, 14, 15% miss to the downside? What would that look like? Should I buy 100 shares? And if it misses to the downside that much, am I okay with that kind of a loss? You have to figure out where your risk tolerance is. But this is a good candidate, in my opinion, for a edge to the upside heading into earnings, which I think are tomorrow night. We'll take a look. We'll just kind of paper trade it and see. Maybe I'll help the room figure out what might be the best lotto play in the calls. The nice thing about the options here is that you've got your loss limited. So if it's a big miss and if the stock goes down, you're only going to lose the amount of money that you paid for the option, and you're probably going to lose all of that because the implied volatility just comes, the gamma crush just comes right down, and you'd be lucky if you get 10 cents out of it. But uh, if it is to the upside, yeah, you're going to get some IV coming out, which is makes it a little tougher to get a high probability win, but the gains can be really good, really, really big. If you can get it a lotto play that goes like from $50 to $150, that's a nice 200% return. All right, enough about that. Let's get over to some charts. So I did update my greens list. We're already in some of these, right? We're already long coin. We bought it yesterday, or did we buy it this morning? I think it was. Hold on a minute. Yeah, it was just this morning. We bought it this morning right off the open. Boom, up very nicely. It wasn't quite right off the open. I stand corrected, but it was at 319. We got in at 319, and here it is at 326. Nice move. It looked a little squirrely there initially, but then nice move on the SEC news. Carvana, we're waiting for this one to really take off, but it's starting to look better. We're up at the highs of the day. We're in this nice, tight, I mean, a super good uptrend, right? Everything is up. This MAs are super stacked. The LRC is raising nicely, and we've got this little wedge, this little apex setup. We're down there at the nose almost, and we're above the midline, and everything looks great. And so we're long, and we're in the money now, and waiting for that to break out. We are long Kava, kind of waiting for this one to break out of the yellow box. It's starting to do this today. It's been up there a couple of times before, so no guarantee it's going to hold. But if we can close up here above that box and we get a follow through tomorrow, we should be off to the races. And I don't think anything is going to stand in the way from this getting back up to 170, which is where it was on earnings. Right? That's the new valuation. For whatever reason, the market was thinking it was overdone, but I think you'll probably get back up there. NVIDIA, we are long NVIDIA in our diagonal debit spread income bracket group. And frankly, I'm a bit surprised that we didn't get a breakdown like we did up here, breakdown to the upside, bounce, and then a rollover back down into the pink zone. That's kind of what I thought would be the path of least resistance. But last night, Marvel came out and reported very good earnings. It just took off to the races. It doesn't hurt that CRM, the biggest consumer management software company in the world, also reported very good earnings. It shot way up. And yeah, so anyway, it's looking really good. NVIDIA's looking great. We're going to ride this one as long as we can. DOCS, I've got my trend trade letter members in this one, and kind of waiting for this little bull flag to break out to the upside. Almost did yesterday, pulled back again today, but this one looks very good. We are long Owl in the room, which is in the very, very strong asset management sector. And it's not the best of breed. APO is that one. But we're already long APO in our diagonal debit spread option play. And this is a nice add to that. So a little bit of a 3-bar reversal, not a classic one, but it's close at the 21 period moving average. We just need to get up above this little pullback line, and then we should really boom nicely back up here to the blue zone. Expedia, this is a power gap. So I've been still kind of working on the best entry strategy for the power gap. The power gap is when you gap up, typically on earnings, but can be for other reasons, to new 52-week highs, and then you hold that level. You can dip down into the gap a bit, but you don't want to see that gap close all the way. And then it typically kind of goes sideways for a little while. And I'm not sure whether we should wait for it to pull back or play the breakout or something in between. So I'm still kind of working on this setup. But I tell you what, every stock on my power gap setup, with just very few exceptions, is either exactly where it opened up on the gap or higher. Most of them are higher. Like Walmart is a classic example. Just keeps going higher every day. So we'll see. But Expedia looks pretty good right now for a breakout to the upside. Your target would be somewhere up here in the blue zone. We're long crowd. We got in yesterday off the 3-bar reversal. above the rising 21. It broke out today on a nice gap with CRM. It's just keep on going higher. This is very good. This is not your best of breed, but number two in the cybersecurity space. And with a fresh stochastic buy signal down there below 20, this is just about as good as it gets. Microsoft. So I sold too soon yesterday, as I usually do. Just a little worried about that inevitable market pullback, which hasn't happened yet, but it is in breakout mode. So it broke out on the day we bought it. We sold it yesterday, and now it's back, even higher today on CRM. This looks good. That Microsoft has been a lagging stock for a while, and you can see the 52-week highs are way up here. So it's got a lot of catch up to do. It is in the blue zone. It's not an uptrending LRC. You can see the confusion here in the moving averages, and now we're starting to get pretty far away from those. It's very vulnerable to a snapback move to the mean. So we don't want to get caught in that. It's not a buy right now. It was a hold yesterday, and as I often do, I got out too soon. But anyway, we took a nice profit and we have moved on. CVLT was a stock brought to my attention by someone in our live room, and I like this setup a lot. You've got a pullback, light, little soft pullback into the rising 21 and a 3-bar reversal. And this one looks like it's just, like I would bet a lot of money that this is going to be breaking out and moving back up here to the blue zone. Here's our Bitcoin trade. Now look, almost, or is it at? Yeah, it looks like it's right at the breakout level. Yes, without us. Anyway, that happens. CMA. This is a power gap, pullback, boom to new highs, now pulling back again. So I think this is good for another round to the upside. And today might be the day. It does look quite nicely set up here. Charter One Financial and DFS and SHW, these are all pretty much the same power gap setup, right? Power gap up, pull back, tried to break out, pulling back again. You're going to see pretty much the same thing for all three of these. Schwab looks the best of those three. This is a superconductor corporation. I'm not exactly sure. I had this on my watch list, and I'm not quite sure why, but I like this setup, right? This Apex setup, it was down below the RTL earlier today, now breaking out above. This one looks very good for another leg higher. AMD. Okay, so I put a few charts on here that I wanted to take a look at the weekly chart of. The daily charts on these don't look very good, okay, on most of these. But let's see if we can figure out the broader picture here. So look at this. Look at this. Now, AMD, this, of course, could break to the downside, and then it's going to be a disaster if it does. However, on a risk to reward basis, on a weekly chart, you're down here in the pink zone, and it is an uptrending LRC. The trend looks much better on the weekly chart. And you're at the supporting trend line. Yeah, it's got a lot of overhead. It's got to break through. But for a lower risk trade, you put your stop just under, I would put it actually just under the lows of this week. Not too far away. Like you buy it at 143, you put your stop at 137, and your target is, your first target is 170. That's way up there. And then 180, and then 200, right? So I like AMD. It's on my watch list. It may be the best risk reward semiconductor setup right now, but we'll see. We've got a couple of others to look at. eBay, haven't been in eBay in ages, and but it's been rallying, really rallying. It's up 100% from about this time last year. That's a very nice move for an old online retail stock, kind of the original Amazon, right? All right, I don't really like this setup, I have to say. This is more of a 3 big weeks down, weak bounce up, forming a bear flag. Probably the next leg is lower, so I'm going to take eBay off. ARM is another one of my favorite IPOs for the last couple of years. Another semiconductor stock, also showing, as AMD did, potential for a lower risk, high probability trade as it bounces off support. We don't have enough data here for the LRC, so on the weekly basis, we don't know what that looks like. It is right up at the 50 right now. That could be problematic. It's not as good a setup as I don't think as AMD, but I would say this is a pretty good kind of number two, right? ARM, and I do think the fundamentals here are very good. SMCI had all kinds of trouble, accounting trouble, going to be delisted, and I'm not sure that's even been resolved yet. The delisting part. But it's been in bounce mode for 3 weeks now. They just came out this week declaring that they're free and clear. There was no problem with the accounting. All a big misunderstanding. I'm not exactly sure what the details were, but bounce off the 200 period moving average, uptrending LRC, coming out of the pink zone. We're above the 50 period moving average, and we're a bit off the highs, which kind of takes a little bit of the risk out of the trade. Yeah, not too bad. Not too bad. I wouldn't kick anybody in the pants if they bought this one as a small fun money lotto kind of trade. That's probably going to be your target. And if you kind of move a line, here's how you can determine what the price it'll be when it hits there. You take a line of the, shouldn't be red, but the same angle as the current rally, and it's going to intersect there about 60. So where is it now? 41, 42? 42 to 60? Nice. So that's a 50% move. 45% move. That looks pretty good. Etsy, haven't been in this one either for ages. Actually, this is no good. No, this is just all down, 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 and now you're overbought. And okay, Etsy's gone. PayPal, of course, was under huge stress, and all kinds of payment processors were coming online and acting as competition and taking their market share away, and they weren't really they were not able to expand their offerings fast enough. And I don't know kind of if they have much of a future myself, although I use PayPal and with our business. But I do like the fact that I think the move is not worth grabbing onto here because it's pretty much already done. But that's your bullish base. This is a system, a trading system that I describe in my book, Trend Trading for a Living. You down, 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 sideways base, accumulation inside the base, and then breakout. That's a bullish base breakout setup, and that took place several weeks ago down here around 69, and now it's up at 89. So very nice move, but I think the move is probably ready to cool off a little bit, or even roll back over. So I'm not interested in that. Squarespace, pretty much the same thing. Bullish base breakout. Here's your bullish base right there, and then you look for the accumulation inside that base. You see really big accumulation right in that area, and then boom, the breakout. Now this is pretty new. This is still a new breakout. It's only about 3 or 4 weeks in. Likely has some good upside. So Squarespace, I think, is probably a good hold into earnings. And then Shopify, similar kind of thing, although it's not really a bullish base breakout because it's not that sideways tracking, but actually this is a good illustration of what to do. Okay, so stock falls, and then it starts to rise again. And as it rises in this new uptrend, you're always going to find along the way these little pullbacks. And for a longer term hold, the very best setup is the first pullback of a new uptrend. First pullback of a new uptrend, that's something you can buy and hold on to for weeks, even months at a time. If you don't catch that first pullback, then you've got to look for a new one. Well, the last time we had a pullback breakout was way back here in August. So it's too late now for that setup, but we can watch it and see if it does pull back again. This is very strong movement, really, really strong movement. So it went from 80 to 115 or so in just 3 weeks, 4 weeks. And that's a big, big move. That's strong price momentum, good accumulation. There was an earnings report in there that market really liked as well. That's always good. So in this case, we wouldn't be trading the weekly chart. We would drill down to the daily chart and try to look for a setup there. We've got the power gap. We've got the little retest of the gap, held very nicely, bounced back up, and now we're starting to get a little bit of a coil underneath the recent highs. This is a good setup. This is a bullish setup. It's a short-term swing, so it's not like you're going to hang on to this for weeks, 3 or 4 days. But this could go to 130, 135 pretty quickly on breakout. I wouldn't blame anybody for nibbling a little bit here, just underneath breakout in anticipation of that. All right, guys, I am done with what I wanted to say. So let me get over to the room, and you can type in whatever charts you're interested in. I'll take a look at them. If you're in a stock, that's fine. If you're thinking about getting into a stock, that's fine. If you're worried about a stock, let me know. So I'll just type in ticker symbols, and I'll do my best to give you my analysis here. We'll do the daily charts for these. So I feel like we looked at this one yesterday, and I'm pretty sure that my analysis was that this is a bearish setup. It's even worse today. So everything is trending down, right? Everything's just falling off a cliff, and you've got some really negative volume balance down in here. These are people selling. For whatever reason, it's totally out of favor with the market. You've got your testing now of the blue zone. Here's the mantra, right? Buy the pink zone in an uptrending LRC, sell short the blue zone in a downtrending LRC, and that's what we have here. We also have the overbought stochastics. We've got almost a test of the 50, and we've got a red bar today when everything else is everything tech at least is up. So no, that's not a good. That's not a bullish setup. Now, of course, the market can just fall in love with this all over again, and it cracks right through the 50, and it just keeps going up to the 200. That's very, very possible, but I'm just telling you that the probabilities of that happening are much lower than this rolling over and falling back down to test those lows around 660. Let's see. Well, you've got a few here. Toast. Yeah, well, this is a fun trading stock. As I recall, it's got kind of a small float and a heavier short position, so it can really get squeezed on the upside. So there's some good things going on here. Obviously, I don't know what's going on today. Market doesn't like it today, and that's a very problematic thing. You need to find out what's wrong here. It reminds me of FOUR, FOUR, which got slammed today on the loss of its CEO, and that maybe is happening something similar here. Maybe it's related. I don't know. But you've got the bullish gap up on earnings. That's a power gap, right, to 52-week highs. And this is a good example of one that just kept going higher and higher. It never did kind of pull back. It never did retest that level. Pretty much from day one, it's up, 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 up. Now, the last 3 days, market doesn't like it. And you're going to need to know why. It's not a buy right here. This could fall down to the 50. It could fall down into the pink zone. It's not a buy until you see a good green candle with good volume, better than the day before. And that's going to take a couple of days. You don't put on the brakes so quickly in a runaway vehicle like this. You've got to give it a couple of days to slow down and then stabilize and hit some support. And then the volume starts coming in again. You get a nice green candle, and then you can buy it. It's not a buy here. WGS. I don't know this one. Looks like a biotech of some kind, but or a med tech. This is very good. So you've got the uptrend. You've got the stacked MAs. You've got a nice looking consolidation, Apex, right? At Apex, I like that setup. And a big green bar today, almost a bullish engulfing, not quite, but it's actually an inside day bar, but it is a good green bar. Volume is a little light, but I would overlook that and say this is a good buy with a stop under yesterday's low. And or if I'm long already, I would hold it and I would start to move up some stops if you've got some profits. But this looks good. This looks good for a breakout, and your target is going to be up here in the blue zone. Oh, you're printing too many symbols for me here. GEF. So this is the defense spinoff. Also good. This is also very. I just know just by looking at it very quickly that this is a bullish setup. You've got the stacked MAs. You've got uptrending LRC. You've got something like we're seeing a lot of these wedges, right? These apex setups, which I really like. Typically, I like the upside, the resistance line to be flat, and then the support line to be at an angle. When they're both at an angle, it can take a little longer for the price to consolidate before it breaks out. But the expectation is that it's going to break out in the direction of the prevailing trend. Clearly, the prevailing trend is up. So we'll expect an upside breakout. I like the move today. Yeah, there's been some distribution in here, I have to say. So maybe that reflects a little bit of some skittishness. But, sometimes that's not a bad thing because people get out and then they see the price moving back up again and they're more likely to jump back in. They made money a few weeks ago. They want to get back in on the next move. And then you get this scramble. So GEF looks very good. It's a buy and certainly a hold. So I've got a friend in several people in my pro trader group who are in Tesla. They've been very patient with Tesla because they've been buying in this little area here, right? Where it dips down a little bit, they nibble, goes back up again, they distribute, they nibble, they distribute. So they're working their trade, their position pretty clearly, pretty actively, I should say. But there's your line right there. That's the one that needs to bust to the upside, about 352. And we're just under that right now. 350, let's call it 353. Let's move it up right there. 355. 355 is going to be your breakout. I like this. A little bit of a gap up the other day on some news, I think. I forget what it was. And then a couple of days of holding that gap, and you're right underneath the resistance line. In fact, I had a thought of getting us on board TSLL in the live room, and I still have that thought. So we'll see. We might add that before the close. This is a very good buy or hold, but it might need some patience. Axon. So this one comes up a lot on my look at that. Comes up a lot on my strong stock list in Market Surge. And I have what I call my A list scanning tool. I just punch that, and it gives me a list of the top 20 stocks or so that are the market leaders in the market right now. And it's kind of a modified IBD top 50 scan. And this one keeps coming up, and it's always like in the top 3 or 4. So I know this is very good, very strong. It's not a buy. It is a hold because you're just too far gone. That's a lower probability, low reward, and higher risk setup. So if you're long, here's what you want to do. You want to trim and trail. What do I mean by that? Well, you want to trim off some of your profits so that you can put that in the bank and protect it. And then you want to trail up your stop so that you are lowering your risk as you go. Beautiful trade, beautiful chart, very, very strong. The best time to buy. There's your power gap, right? Here's your power gap on earnings. And then your nice little bullish flag. You want to buy somewhere inside that flag in anticipation of further upside. Bullish flags are very good. Apex setups, very good. Ascending triangles, very, very good. They're all bullish setups. It's just that this is now already in breakout mode. You want to get in before the breakout. Okay, let's look at DRS. Yeah, this is also good. Stacked MAs. There's your uptrending LRC. Here is your, I wouldn't quite call it an apex setup, but it is a flag. It's in between a flag and an apex. Apex tend to be a little more extended, not so wide at the base. This is more of a flag. It just happens to be a very big one. But it's a beautiful chart. It is ready to go. Volume balance, not real good, but I think you were seeing a lot of distribution in the last few days of November. Not so much in the mags at the top, but a lot of the second tier stocks. This is just very good. You can buy it today. I mean, it's a big green stick. You know my rule about big green sticks. You very often get a better price the next day, and then you're going to kick yourself. But if you're already long, it's a very good hold. I would put my stop just underneath today's low and trail it higher. TLT, yeah, the bonds have been a real mess. There's just no way of getting around it. So it gapped way down today, rallied like crazy all the way up. Big green stick, it's not a buy today. It's in a downtrend. Bonds are very, very vulnerable to further problems with a hawkish Fed and a hot economy. Bonds tend to like recessions. They tend to, they're really in play when when the rest of the economy is not so great and everything still is firing on all cylinders. So bonds are under some pressure. There are also problems with China not buying enough of our bonds and selling, in fact, to finance their stimulus package. Right, they're stimulating their economy with a lot of spending, and to finance that, they're selling bonds. So that's a problem. The recent big spurt in federal spending here in the United States, the last few months, that's being financed by selling bonds also. So this is putting some artificial restraints on the prices of bonds. It's not a good hold. I mean, I guess it is a hold if you want to just hang on to this and wait for about a year to get 7 or 8% on the price. You'll get some dividends, of course. That's not much of a trade. So I would pass on it until those things start to pan out. And besides, everything is still in that downtrending motion, and you are always vulnerable to a loss if you're buying something in a downtrend. Just remember that. PRGS. There are some exceptions to that, but man, you got to know what you're doing if you're going to trade, if you're going to buy some downtrends. So this is good, right? Good bullish chart. We've got the stacked MAs, uptrending LRC. We've got some very good volume balance down here. And it looked to me like this is kind of like, that's the important line around 69.70, 69, let's call it 69. We've been up there a couple of times. We come back down. Now we're back up again. To me, this looks like it's done. I don't think it's going to come back down below 69. So then your target, you put your stop underneath today's low, and your target would be up here in the blue zone in the mid 70s. That's a decent trade. Yeah, and that's a good company too. Good growing, strong software company. We did Tesla. Let's do VST. Yeah, nice. Everything's uptrending. Stacked MAs. You've got the bull flag right here. Nice looking bull flag. Right, little pullback. That's a very good, nicely formed. You kind of like to see the highs falling a little faster than the lows in your flag, or a symmetrical wedge is also good. And we're right up there against the resistance trend line. You can buy this, you can hold it, either one. I'm good with that. And lastly, I know we did NVIDIA already. It's bullish. It's just a little. It's not exactly a very good technical setup right here, because it could really get trapped at the 52-week or all-time highs, and we're not very far away from that right now. So at 145, 149 or so, 149.50 is the level of resistance. So you could get up there and it could just go sideways for a week. You could get up there and it could pull back for several days. And there's not much upside between current price and there. If you are long, it's a hold. If you bought last week when you should have, it's certainly a hold and a very nice trade, and you want to move up your stops. But it's not a buy today, I'm sorry to say. All right. I'm going to let you go, guys. Have a great rest of the afternoon. We'll see you back in the room in just a little bit. I'll produce this, put a link in the room, and then we'll go from there, and we'll trade the last 45 minutes together. God bless.